And then we also have this new leverage ratio in Basel III at 3%, which is equivalent for the average European bank to just a 3.7% in terms of equity over asset ratio, and for the US for 4.6%. So we can see here that Basel 1, 2, 3, maybe they had good intentions, but the effectiveness in terms of equity over asset ratio are extremely low. This is Basel, and they always talk about this. Yeah, when you read the balance sheet of a bank, they always say the first page, we comply with Basel and we have a very high Basel of 10 or whatever, but they never talk about this.
What explains the fact that the US has a double than Europe? Is
It's
it
for
more sovereign bonds?
It's for, well,
I mean less.
yeah, it could be. It could depend on the composition of the assets and also for accounting rules. So what I did, I took the average of the typical European or the typical US bank, and I did the simulation of reducing, complying with Basel, and what will happen with the equity over asset. And those are the numbers. So now, finally, what about Chile? So yeah. I had to. First, I wanted to talk about Chile, but when I started to study Chile, I realized that I could not do anything without understanding what was going on outside Chile. So, first of all, we had our own financial crisis in 1982-83. It was the worst financial crisis since the Great Depression. The GDP fell 17%. It was really a disaster, and the government had to bail out all the banks. After that came the current banking law, which was written in 1986. But today, Chile has a very good reputation in terms of banking. Actually, according to the World Economic Forum, Chile is top 9 in terms of soundness of banks. And we are about, I don't know how they did it, but we're about Sweden, about Luxembourg, about Switzerland, about France, the US. Anyway, the thing is that we have a good reputation, but capitalization levels of banks are similar to international banks. So we are not that, it's not that we are that good. You can see here that the Chilean banks, they're about a little bit below 10%. You remember that the US started here, and now they are just at 10%, and the European banks, they are now about 6%. So we are there, but we are between Europe and between the US. Maybe there could be some accounting rules difference, but we are not that good in terms of equity ratio. So we have a good reputation, yes, but it's not. I think it's not good enough yet. And another reason, some people say, hey, you know what? In fact, the Chilean banks were not affected by the subprime crisis at all. And they say this is because we have a very powerful regulation and we are different. I think that we were lucky. Why? First of all, Chilean banks are, the integration with international banks are slow. Still today, even though this is changing now. That was in 2006. Now half of the main banks are owned by international banks. The main banks are Banco Santander. Now we have also BBVA is there, Scotiabank is there, with the other Itaú. So now the international banks are coming into Chile. So this is changing. And the other reason was low penetration of sophisticated financial products like all these mortgage-backed securities and all these derivatives, whatever. But this is changing. I mean, that was 10 years ago, and banks and investors are becoming more sophisticated, so this is going to change. So, well, this is the evolution of the Basel ratio for Chile. I think I can skip that. This is the average equity ratio. This is equity ratio at market value. A little bit. Now let's talk about Chilean regulation. In 1986, the Chilean government Congress passed the banking law that we still have until today. Actually, it was not the Congress.
There was no Congress.
Yes. Yeah, I was thinking about that. It was the Chilean authorities. Okay. They set a leverage ratio of equity over assets of 4.8%, which was okay for the time, and for that time was one of the highest leverage requirements. They also established new higher supervision for banks and restrictions in lending. That was incredible. Before this bank, what happened a lot was that banks were lending money to companies related to the owners of the banks, and that was a disaster. Now you cannot do that anymore in Chile. Then in 1997 there was a change when the bank law adopted Basel I. So they included the Basel ratio, the regulatory capital ratio at 8%, but they reduced the leverage ratio, equity over assets, from 4.8 to 3%. Why they did that, I have no idea. And now, in 2017, there is a new banking law under discussion. The final draft is still in Congress, and basically it will fully adopt Basel III. There will be no change in the minimum leverage ratio. Okay. So what's our proposal? We believe that the new banking law will update the Chilean regulation with international standards. That's okay. But we have already seen that international standards, they have a lot of good intentions, but they are not effective. I mean, there is no reason to think why in the future, with the new requirements, Chilean banks could reduce their equity ratios. If the new regulation allows banks to have an equity ratio of 3 or 4%, why in the future we cannot see banks having equity below 4%? This is what happened in Europe. So what we are proposing is to set today an equity over asset requirement of 9%. And why 9%? Well, there are some economists, for instance, Professor Ahmadi proposed a much higher ratio, 25-30%. I am.
You know, like we wrote a letter with many academics saying at least 15 would be a starting point. Like, what's the problem?
Fama, the economist, also keeps proposing 50%. I am sympathetic with 25%, 30%, but I think 9% it's a more realistic from a political point of view to ask for, and also it's equal to the current average for Chilean banks. So there should not be any strong opposition against setting a requirement which is just the average. There are going to be a few banks that are very close to the average, but for most banks it shouldn't be like an issue. For non-compliant banks, we propose partial or total dividend payments restrictions until the required ratio is achieved. In my paper, I have one chapter dedicated to the role of dividend payments, how to recover capital with dividend payments. But this is just to show you a simulation for Chilean banks. In 10 years, only using dividends, you could capitalize equity from the current 9% to 13%. This is an extreme situation. It's not possible that the bank will stop paying any dividends for 10 years. This is just a simulation. Okay?
Just so you know, there are many companies that don't pay
Yeah,
dividends.
well, actually, by the way...
I mean, because invest the money, this money is not going
Yeah.
away. It still belongs to shareholder.
Yeah,
With the
Google...
bank, you can sell the shares. I mean, you know,
Exactly.
Warren Buffett
Yeah.
never pays dividend.
Google didn't pay dividend for how many years? 10 years? Amazon
Price
says?
is in the sky. Especially for their system.
So when some regulators or banks say, hey, it's impossible, there's no way to increase capital, well, this is one way. And there are many others. You can issue more stocks, but this is a very simple one. Well, and finally, I just wanted to let you know that this proposal has been submitted to the Chilean Congress. Luckily enough, I was able to finish my paper before the bill was passed, so I had the opportunity to get in touch with some congressmen in Chile. So we are now we're having some conversations, so I submitted them my thesis and a summary of all my proposals. Of course, nothing is, if you know, Chile is now under an electoral process, so we're gonna have our runoff in 2 weeks. So before 2 weeks, nothing is gonna happen. Of course, I totally sure about that. But after that, the plan is to continue continue being in touch with both cameras, the lower and the higher camera, to introduce this 9% of capital equity requirement.
In the US, there's 2 senators from both parties, Brown and Vitter, and they propose 15% equity to assets for the top 6 banks, and then 8% for medium-sized banks. Of course, it didn't come into committee either.
Yeah.
So
When they met?
2 or 3 years ago, and then, Senate decided unanimously to reduce too big to fail subsidies, but there was no action with that. So it's very nice to say, I don't want too big to fail. But they didn't do anything, and then this proposal doesn't even get discussed. Of course, there are others, Glass-Steagall and other things, also bipartisan. But this is Sherrod Brown, Democrat from Ohio, and David Vitter, a extremely right-wing. I mean, he's not running again, but he was a very right-wing Republican.
What do you think was individual incentive for those 2 senators that allowed them to?
They didn't like too big to fail. I think too big to fail is sort of, Republicans hate bailouts. They were dragged kicking and screaming to do the bailouts. They didn't like TARP when it first came, TARP being the direct investment. And what also Francisco did mention is that for liquidity problem, for pure liquidity, we have a Federal Reserve. The Federal Reserve, as a central bank, allocated something, I don't know, $7.7 trillion of loans to hundreds of banks in US and Europe. I mean, the amounts are astronomical, and it took a lawsuit to even get them to reveal that a few years later, not in the middle of the crisis, but just to see the support that they were giving to the banks and below market loans. So there were many forms of bailouts that went on during the financial crisis. Nobody wants to look back, but, in that position, they'll say they had the courage to save everybody, but they don't have the courage to stop a dividend. It's pretty ridiculous.
Okay. And I have my last slide, and then I'm going to give you some time for Q&A. So, a few conclusions. First, banks hold low equity ratios compared to other industries because banks benefit from explicit guarantees, the deposit insurance, and implicit subsidy, the bailout promise. Basel Accords are good intentions, but weak solutions. Good stand of banking industry in Chile is not guaranteed. We propose a minimum equity or assets ratio of 9% for Chilean banks, with restrictions to paying dividends for non-compliant banks. That will be a guarantee that will prevent reductions in the equity ratios in the future. And also, we believe it would place Chile in the international vanguard of banking regulation. Thanks.
So if Chile has 9%, if they follow your recommendations and do the right things, how does that affect, your last thing was about international